Hi, folks. This is Heidi Gluck from Key Advisors. Thanks so much for joining us today for the State of the Used Truck World Report. Just give a few more minutes for the last stragglers to come in. And I want to remind you, if you have questions during this webinar, you just type it into your question bar in your control panel, and I will relay them to John and Bennett.
Okay, Heidi, we have reached the max amount of participants, so I guess we will not wait for any more stragglers, and we will make sure that everybody knows where the recording for this is posted afterwards, so everybody can get a chance to look at it online. So first and foremost, I want to thank everybody for taking some time out of your day here. I know that these are trying times for everyone, and there's certainly a lot of chatter and a lot of noise going across the wire. And so time is really pretty precious right now. And we want to thank you for honoring us with your time here over the course of the next hour. And we certainly hope we're going to provide you some relevant information, give you some things to think about here as we go. Like Heidi said, if you do have any questions that come across, because there's such a congested line here, we're not going to be able to have you jump in real time. Type your question into the chat, and then Heidi will notify either myself or John that we've got a question here, and we will stop and talk about it for as long as we can. But just so you all know that we've designed this, that we're going to have anywhere from 15 to 20 minutes dedicated towards questions at the end. So if we don't stop and answer your question right away, don't worry, we'll get to it in the question and answer section at the end here. So just a little preamble for why we're doing this. Some of you are used truck subscribers, some of you are not. We are not going to be selling anybody anything today, but we came out with a used truck 2020 forecast to start the year. And that 2020 forecast had some underlying assumptions built into it that we felt pretty good about at the time. It will surprise no one that over the course of the last few months, and in particular here over the course of the last few weeks, most of the underlying assumptions that were put into those models have been blown mostly to kingdom come. And so what we wanted to do was we wanted to sort of plant the flag here today and say there's a lot going on, there's a lot changing. Here's what we're looking at, here's what we see right now. Here's what we think you should do about it here in the short term. Here's what we think you should do about it in the medium term. So just to recap here, a little bit of an agenda. We're going to spend probably about 10, 15 minutes talking about what we're seeing right now. For some of you that aren't familiar with our materials, these will be some new measurements. I'm going to try and explain them as best as I can as we go. Most of them are pretty intuitive. So, you know, we don't do a whole lot of rocket science around here. We just look at regular science differently. So it should be pretty obvious what we're looking at here. If it's not, both John and I are grounded here for the next few weeks, so we've got plenty of time to schedule one-on-one sessions with anybody who wants to get some more information or get some advice specifically about their current situation. So we're going to run through what we're seeing right now. We're going to run through what we see coming at us here for the next 2 to 3 months. We're going to talk a little bit about how this affects our 2020 forecast. And then those of you that have been friends and customers of ours for a while are probably sick of hearing me say this, but we finish all of our communications and we finish everything that we put out there with the question, so what? What am I supposed to do differently tomorrow, next week, next month? How does this information change the way that I'm supposed to go about doing business? And if the answer to so what is nothing, we probably wouldn't have brought it forward to your attention. So we want to make sure that everything we put out there isn't just noise. Everything we put out there is actionable and is something that you can do with this to make your business better. John, as we go along this, as always, feel free to weigh in as you find appropriate. Jump in and stop me when you think something needs clarification.
Absolutely.
Good. So the question is, what are we seeing right now? What's going on today that we think you should be aware of in the used truck market? We're going to have some slides developing each of these points as we go here. First things first, we are seeing huge auction volumes. We'll talk about it in a minute, but we've already got a record number of observations for March, and we continue to collect data. So it's already a record, and we're going to continue to beat that record. And the correlation to that, the sort of the opposite side of that coin, is that the used truck supply appears to be stabilizing. It has been on a relentless upward march for probably the last year and a half. And we're looking like we're seeing some relief there. So the supply is stabilizing. For those of you that have been on the team for a while, that we've been talking to for a while, you'll know that our primary indicator of used trucks pricing strength is supply. Supply always drives price in this market. Demand stays relatively stable. We've been talking to a lot of dealers here over the course of the last few weeks. One of the things that seems to be a relatively consistent theme is that retail activity is actually still staying pretty good. The traffic is still there. Not many people prior to this were setting the world on fire in March, but on balance, March looked okay prior to this. And we haven't seen a lot of dealers that are reporting to us a huge drop off between here and the last time we talked to them in March. The two big bullet points here on the bottom that we think you need to be most aware of is, one, the supply chain and the strain that's being put on our logistics network here is incredible. And as production is sort of whipsawing here to meet these new demands, over-the-road trucking is the backbone of what's going on there. And so the logistics market went from sort of slow, under a little bit of pressure, to now we just can't keep these trucks going fast enough. And then the other thing that's really important from a supply standpoint is new production shut down. Every one of the major manufacturers now has closed their plants in North America, and that's going to put a big change in the way that we see supply here moving forward. Developing one of the points that we started with here, this is a measure of how many units we're seeing come across the auction block for sleeper tractors by month. And this layers 4 years of data on top of itself. We go back about 7 or 8 years with this data now, but the most recent history is the most relevant. What you can see here is that January sales were down a little bit historically. February sales were a record. March sales continue to really set a pace here that we've never seen before. We see similar patterns for this level of auction production for all of the categories that we're looking at, in particular within day cabs and mid-range diesels or your everyday box trucks. The early indications that we're seeing here is that this volume has not had the negative effect on pricing that we would usually expect to see in this environment. Normally, we can draw a pretty straight line from the volume of auction units we see to the pricing that's realized. Higher supply, lower the auction price that we tend to see. So that's a bit of a mixed signal for us. And usually when we see our data doesn't add up, that's because we've reached an inflection point in the market. We see a lot of confusion in the data. We see a lot of points of data that point in different directions, which to us indicates that the market's about to turn. And so right now the market has been bad for a while. When the data gets noisy, that means it's either going to get much worse or things are going to start to get better. And so right now what we see is this is an early indicator to us that the used truck market may have firmed up very quickly, because we're seeing data points that don't match with each other, that they're not telling the same story anymore. John, could you speak for maybe 30 seconds on sleeper auction volumes this month? Any other particular things of note here?
You know, we're going to talk about bankruptcies in just a second. So I'll say that the overall content of what's been going across the auction block this month has actually been pretty high. And I agree with your point that so far we haven't seen anything noteworthy. Pricing in March doesn't necessarily look materially different than what we saw in February. So, you know, that's good news. I think the other thing, though, that sometimes gets lost in these high auction volumes, and yesterday I was just looking at the sale in Northeast Maryland, There was a block of 15 to 20 4x2 day cab tractors that got pulled, but generally speaking, what's listed is getting sold. And that's, really from our perspective, trying to figure out what's going on here, that's really good news to know that there's a buyer for every unit that's going across the block. So, demand still looks pretty good. And they're not only are they buying trucks, but they're buying trucks at prices that are in line with current market conditions.
And again, I want to, for those of you that have not seen our output in the past and don't know how we think about this market, I sort of want to clarify there, and I want to reinforce that what we're talking about here for this particular graph are sleepers, and we've got some other information, not in this report, but in other reports that refer specifically to day cabs and mid-range. So we do not think about the used truck market as a monolith. We think about the used truck market split out into heavy haul, vocational, mid-range, sleepers, and day cabs. So when we speak about the market, we're never talking about the market as a whole. We're always speaking to subsections of the market that we measure differently.
And Bennett, just to repeat your point, if we were to have shown day cab tractors here, we'd also be looking at record volumes, and same on the mid-range sector that you talked about.
Yeah. So speaking briefly on the point that John just brought up, one of our big concerns for 2020 coming in was the impact that fleet bankruptcies were going to have on used truck pricing and volumes at the auction market and dealer lots. There was a lot of bankruptcies that happened in 2019. We anticipate that those are going to continue to show up to the auction block here over the course of the next few months. The good news is that the evidence so far suggests that these bankruptcies are not swamping the boat, that these are not pulling the sleeper market or the day cab market down with the intensity that we would have normally expected. This was a big concern for us. It remains a concern for us, but there's a distinct possibility that what's happening right now is going to give this a lot of cover, and this is going to fall farther and farther back into our level of concern moving forward.
I agree with that, Bennett. When you look at the last 3 sales in Columbus, Ohio, Indianapolis, and again in Northeast Maryland, it seems like the Celadon units, which was the #1 lightning rod for most of the questions that we received in our 2020 forecast, they're being digested in an orderly and normal fashion, and the pricing on them is actually, okay, given the specifications and the miles and the fact that they are repossessions. So we're working our way through it.
Yeah. So again, we discussed earlier, and for those of you that don't know us, our primary indicator of where pricing is going to go is supply. And so we've got several different ways that we measure supply. This is one of our supplies for the entire market, not just one of the micro markets that we discussed earlier. One of the things that we've been seeing over the course of the last 6 weeks was a run up in inventories, was a big run up in supply that appears to have leveled off here. It slowed down last week and it actually moved in the opposite direction this week. This is, again, we talked about the auction volumes. A lot of times when dealers just don't have any more, or dealers or big corporate players just don't have any more room on the lot or on the balance sheet, they shunt trucks off to the auction block. So we think that what we're seeing right here is likely affected by some of the huge auction volumes, and it's going to be more affected by the production shutdown and how that affects the trade-in cycle moving forward. So one of the things that we're seeing right now is the inventories have leveled off. We would again caution everyone that 1 observation does not a trend make. 2 observations does not a trend make. We're going to continue to watch this number very closely. This is going to be a big indicator for us about not only what we're doing with throughput, but what that throughput is going to look like in terms of pricing. And at what point will buyers on the marketplace be willing to spend more for equipment as opposed to significantly less for equipment, which is what we've been seeing over the last few weeks here, or few years, I should say, few months.
Hey, Bennett.
Yep.
Just, when you look at a global chart like this, sometimes it's hard for all the points to jump off the page, but the market never goes into a recovery mode all at once. And so some of the good news in what's happening with inventory levels kind of gets lost when you look at this slide. But there are some blue bars, and the inventory index is consisted of a dealer portion, and it's also consisted of a corporate portion. And so one of the points is dealer inventory levels for the last several months have been very stable. So that's certainly very good news. And then medium duty inventory has been drifting a little higher, but not at an alarming rate. And sleeper inventory has actually been coming down. So, you know, a lot of the increase that we're looking here happens to be on the corporate side of our index, and it also happens to be concentrated in the day cab sector. So there's some really good news that's kind of embedded into that slide that makes us feel good about what's going to happen to inventory here in the short term.
Absolutely. And so, you know, speaking of that index and sort of where that comes from, there are a couple places where used truck comes from, but for the most part, used trucks come from, are created as a old truck is traded in for a new truck. One of the reasons that we've seen such huge pressure on used truck supply inventories, used truck supply over the course of the last really probably year and a half has been that we have been on a huge boom cycle for new truck sales for 2018, 2019, continued to set records over and over again. What you see here towards the end of 2019 and into 2020 is that the new truck order cycle has drastically leveled off and has been on a downward trend. For our friends in new trucks, that's a real challenge. But for us on the used truck side of things, that's going to give us some, we were already anticipating some relief in used truck supplies to be coming our way throughout the course of the year. What this is going to do is drastically shorten that relief cycle. I haven't seen what the new truck orders look like for March, but I anticipate they're probably going to be challenged March, April, May. There's going to be some pretty lean times here from the new truck side of things, which is obviously a challenge for the dealership. We're never going to celebrate new truck sales being down, but from our standpoint, when we look at the onslaught of inventory that keeps coming our way, that we have to keep figuring out what we're going to do with, this is going to spell some relief here in the near term, and we're going to talk about why that relief is going to come even shorter here in the coming slide. John, anything on this one?
You know, just a clarification, Ben, the gray bars for 2020 is about 15,000 a year. And if you annualize that, that's 180,000 Class 8 new trucks. So don't feel too bad for the new truck guys, right? They can still, that's still a pretty healthy industry. It's just dramatically less than we've seen the last couple of years. And so, you know, the new truck OEMs will be profitable if they could continue to build out 15,000 units a month. That's not the end of the world there.
Good. So one of the big pieces of information, I'm sure this is not going to be news for anyone on this call, but one of the things that really jumped out to us here over the course of the last week is that new truck production in North America has halted. Volvo Mack led off on the 20th, Navistar followed suit on the 23rd, Freightliner and PACCAR also followed suit, I think either that afternoon or the following morning on the 23rd. So obviously this is a challenge, and we're not celebrating the idea that these people who worked at these factories worked really hard on this production are going to be furloughed here for a little bit. But from our standpoint, this is going to have a drastic effect on used truck supply and is going to take that pattern of decreasing increase, I guess I'll say, if that makes any sense, that we were seeing through fourth quarter and the early first quarter of 2020. And this is going to drop a hammer on those numbers. And the used truck supply that comes to us by way of new truck trade-ins is going to stop. And so this is something that you guys all need to be ready for when we're thinking about asset management and when we're thinking about the trucks that we've got on the lot and the decisions that we're going to make here. The way that used trucks used to be coming to us is going to look very different over the course of the next few weeks and the next few months. And you need to make sure that you understand what that looks like for your lot, for your particular dealership and your customer base. So the note that we'll have here from the demand side, you know, a lot of times we don't talk a whole lot about demand because it's there's a whole lot of other things that affect it, and historically it's been pretty stable. There are some things going on that we think are going to affect that demand curve for the first time in a long time here. The first thing that we're going to see is that the hours of service restrictions have been lifted by the Department of Transportation. This means that we're going to be, not only are new trucks not going to be coming into service, our new trucks not going to be delivered and put to work, but the burn rate for the rolling stock of used trucks that's out there right now is going to be increased. And so where we maybe before would have seen a used truck ready to be traded in, or a used truck buyer be looking for a truck maybe a year from now or 2 years from now, with an hours of service restriction lifted, if this is an over-the-road Class 8 trucker, the likelihood that trucker is going to burn through his inventory, burn through his unit, is increased now. And where we were probably looking before at a 6-month, 1 year, 2 year time horizon for that used truck driver to need a new unit, now we've shortened that to 3 months, 6 months, 1 year. So we're going to burn through the units that are out there faster. And you know, we've also got a supply chain that's just scrambling to meet the demand of new production patterns. One of the things that was causing some of the pressure on fleets over the course of the last year was that a lot of producers had stocked up on raw materials ahead of time before everything that was going on with China sort of came home to roost, and trade actions, and there was a lot of uncertainty there about what that was going to look like. So part of the craziness had been born from everybody pulling ahead raw materials, doing everything they could to get underneath of the trade challenges. Well, now everything's changed, and we had automakers that used to be making cars are now making ventilators, and that requires an entire new set of raw materials and a lot of new everything. So the downward pressure that we were seeing on fleets, the downward pressure that we're seeing on the supply chain, whipsawed really quickly. And it went from nobody needing to move everything to everybody needing to move lots of new stuff. And the supply chain has been really strained to keep up with the demand that has placed on them. So we're going to probably see an uptick in buyers, an uptick in interest from fleets that are running used trucks, and even fleets that have traditionally been running new trucks. The rate at which we're going to chew through the trucks on the road is going to increase, and if new trucks aren't rolling off the line, used trucks are going to be required to fill that gap. So we're probably going to see some demand pressure here over the course of the short to medium term that could have some advantage for you as a used truck department. And then, you know, the last thing we've got on here is that you guys have been designated as key employers, key pieces of the supply chain, and do not have to stop work, or maybe better said, we need you to keep working to keep the supply chain moving. And so, you know, you guys are going to be open. You guys are going to stay open for business. I'm not entirely sure if that same key designation is going to be pushed over to some of your competitors that aren't part of a dealership group. So it will be interesting to see how these shelter-in-place, stay-at-home orders, whatever it is we're going to call them, are going to affect some of your traditional competitors in terms of independent used truck lots that may or may not have the ability to stay open like a lot of you guys do. John, any other thoughts, comments on the strain on logistics that we're anticipating to see here over the near term?
Nope, think you got it, Bennett. Demand could be better than we had anticipated in our forecast.
Let's keep moving here. So what are we seeing in the short term? What do we anticipate seeing within the next 4 to 8 weeks here? The first is that we anticipate supply to crest and recede. It looks like even in the time when we first wrote these slides, supply may have already crested, and that may have happened sooner than we thought. But we anticipate not only for it to have crested, but to start pulling back. The data points that we see on the right side of this graph here are just for illustrative purposes. This isn't things that we've seen yet. This is what we expect the new few weeks to look like. And the big reason for this is that the spigot of supply has turned off. There are no more new trucks coming for the foreseeable future after the trucks that have already been built are delivered. New production has been shut down. We're going to have to keep pulling water out of the hose, so to speak. We're going to have to keep buying used trucks that are already in supply, but the ability to replenish that supply for the short term is going to be challenged. So we anticipate that once this starts moving, it's going to start moving pretty quickly, and that supply is quickly going to turn back in our favor. We don't think that pricing is going to recover that quickly, not as quickly as the supply is going to start to move, primarily because we're still just really oversupplied right now. But depending on the rate at which that happens, that last bullet point there may not be true 2 or 3 weeks from now. We don't know what that's going to look like. So big caveat there. This is not what we're actually seeing. This is what we expect to see. And we still think we're going to be pretty oversupplied for the short term. But we think that the downward pressure that we've seen over the course of the last year and a half should relent in the short term. When we speak specifically towards sleepers, and I'll again, there's some jargon here, but what I'd like for you to focus on this slide is the blue circle. The blue circle is when this inventory index creeped over 10,000. And if you go back and you look last year at when the downward pricing pressure really came around, this matched the downward pricing pressure almost to the week. So when we get back below this number for our index for sleeper inventory, that's when we anticipate that we're going to start seeing some pricing relief and maybe even some upward pressure. But what we're going to see here is that sleeper prices are unlikely to recover in the short term until we've chewed through enough of the inventory that's out there to bring this index below the 10,000 number. And it's a number that we're going to start pushing out more aggressively to our used truck subscribers, the folks who are helping with their used truck business. But this is the number to watch. This is when we're going to swing from a situation of severe pricing pressure to probably a flat pricing environment, and a little bit farther down the chain, when this number gets below 8,000, is when we actually anticipate that the price of sleeper tractors is going to increase on a month over month instead of the regular rollout economics, which is what we see right now. John?
I just would remind people our forecast for the year had indicated slow measured price decreases through the first 6 months of the year, stable prices in the third quarter, and then modestly rising prices in the fourth quarter. And I think the message of slides 11 and 12 is that so far we're seeing exactly what we thought we would, but the changes that are occurring in March, the improvement in pricing might happen a little faster, and the magnitude of the improvement in pricing might be a little greater than we had originally forecasted.
So similarly here, we're not going to spend a ton of time here. If you're interested in getting copies of the deck, copies of the slides, John's information is going to be in the final slide here. Otherwise, send something to just the general Key Advisors inbox, and we'll get back to you. But similarly, right now we're still seeing some upward movement on day cab inventories. We anticipate this is going to change. We think that the pricing pressure is going to start to relent once we get closer down to probably about the 6,000 range. And then things are going to turn around for us once we get into the 5,200 to the 4,750 and under 4,750 is when we anticipate to see upward pressure kick in. Like John said, we thought that this was going to be coming maybe towards the end of the year. Everything now has been accelerated. Everything that we thought was going to be coming 9, 12 months from now is been kicked up, and we're expecting now from 2 to 6 months here, depending on how other variables change over the course of the move. So some other areas that we think you should be aware of, that you should be looking at. We think that the sleepers and the day cab market is going to remain relatively strong here, especially if your customer base is made up of fleets and over-the-road guys. If you have a business that's concentrated in heavy haul and vocational, we would be ready for the next few months to get uncomfortable. Where we see these areas or these units typically go into service is areas around construction, the oil fields. For some of you, this is working out in the timber industry. We anticipate that all three of these are going to be really challenged here moving forward, particularly with the oil field. So if you've got a lot of oil field business that you've traditionally kept some heavy haul units that go working in, I don't think we need to tell you, this will not be a surprise, but this is an uncomfortable time to be in the oil business. The one big thing that we'd also advise you look at from a vocational standpoint is, where does this government stimulus get directed? When we think about what we saw in 2008, 2009, a lot of stimulus was directed towards shovel-ready projects, which affected this vocational business. Keep an eye towards where the stimulus goes, and that's going to help you understand where the vocational piece is going to end out and where that's going to go. The big industry that we see or the big segment that we see is going to be the most challenged here moving forward, probably going to be mid-range. When we think about the businesses that usually drive the mid-range business, we look at small business, we look at restaurant activity. A lot of the people that these MRDs, that these box trucks traditionally support and supply, that business is likely to be challenged. So, keep an eye on that. If you've got traditionally a big mid-range business, this has been an area that we have really liked for a long time. In the short term and probably in the medium term, we like mid-range a lot less than we did before. And so it's something that we advise you to keep a pretty close eye on. John, any thoughts on the rest? I want to keep moving here.
I really like where you're going with that. These are three sectors that we've been bullish on for 3 years. And in fact, going into 2020, we remain bullish. But of all the things that are going on right now, these will be the ones that are affected the most. So we're sort of raising a caution flag here, not saying liquidate your inventory, just manage these assets more thoughtfully and price them more effectively. You didn't have to worry about this kind of inventory very much a long time ago, and now it's a new day.
So when we think specifically about our 2020 forecast, there's a few things in here that we think we need to update and that you guys should be aware of. Just a reminder for those of you that haven't seen it, again, when I was talking about rocket science earlier, this is a highly scientific, highly advanced modeling process. Red means stop, yellow means slow down, green means good. So we're told that some people have already stumbled onto the idea, so we're not going to try and take credit for it, but not a tremendously complex classification system. We thought that the economy was sort of okay coming into 2020, a little bit up in the air, but for the most part, pretty good. Similarly, the trucking industry as a whole, we thought was going to be an okay. That the used truck market was going to be challenged specifically, that the liquidity was going to be challenged specifically, and that we gave the used truck supply assessment a yellow because we thought we were going to see some relief towards the end of the year here. So which of these do we want to change now that we're 3 months in and we've had some variables shift on us? First things first, our assessment of the United States economy has gone from a yellow light to a red light. I think we can all agree that at this point, the question isn't necessarily, is the economy going to be good or bad throughout the course of the rest of the year? The question is, how bad is this going to get? And nobody really knows, but I think the safest assessment right now is that it's going to require a significant amount of heartache to find our way onto the other side of this. So the question is no longer will it be good or will it be bad? The question is, how bad is it going to get? We're sort of looking towards the end of the year in terms of some wobble in the economic activity, because around elections, economic activity tends to wobble, period. Usually around September, October, everybody starts to hold their breath, waiting to see what's going to happen in November. We think that the general turbulence that we're experiencing right now, and we will experience over the course of the next few months, is likely to be compounded by what we can almost guarantee is going to be a very contentious election season, mostly because they all are, but there's going to be some heightened everything in this one. The big silver lining for us is that the strain on supply chain and the production whipsaw is going to create opportunities specifically for our sliver of the industry. So the overall domestic economy is going to be challenged. I don't think anyone's going to argue against that fact right now. The opportunity is that if you're involved in the used truck business, we think that that challenge is going to create some opportunities for you in the short and medium term here. Speaking of that, our used truck supply assessment has gone from yellow to green. We are getting a huge supply side shock from the new truck production shutdown, which is going to shut down the new supply of used trucks coming our way. We're going to get a rare demand shock that doesn't happen very often, but we anticipate seeing one over the course of the next 3 or 4 months, that we're going to get that help from the hours of service relief and the demand that we're seeing on the national supply chain. We don't think this price change is going to be immediate, like we talked about. We're going to still need to work through some of the oversupply. We've still got to clear our throat a little bit from what we've seen over the last year and a half, but help should be coming from this department. Okay, so what? So what are we supposed to do about this now that we've just given you guys 18 slides worth of stuff to think about? John, do you want to maybe give me a bullet point or two on how should you respond here? I'm sure they're tired of hearing me talk.
Be happy to. I think, our overall, Bennett and I are kind of fundamentally finance guys. Okay, so maintaining control of the pricing lever is always our first piece of information or our first piece of advice. But if you have spot shortages in your inventory that you're looking to go out and fill, I think you're going to have plenty of options, plenty of choices. Don't overpay for equipment. And if you're looking at future trade-in valuations, our advice is continue to be very conservative, and in terms, just will create opportunities down the road. And so be cautious with the pricing lever. Ben, why don't you go ahead with the second one?
Yeah. So, again, what we were discussing here in the quote, the rest column or slide is look around yourself pretty carefully in terms of what your historic customer base has been, and think pretty hard about how that's likely to be affected over what we're seeing for the next few months. We do anticipate some help is coming for day cabs and sleepers, but we think that the market is going to get really bearish for mid-range. And if you've got customers that are restaurant suppliers, if you've got customers that are supplying small, non-essential businesses, think really hard about what's on your lot and who you are anticipating to sell that unit to. If the unit or the industry or the customer that you had in mind for that unit is going to be shut down, it might be time to reevaluate the plan on that unit. And it may be something that we just got in that we liked and we thought was going to be good for us. But if the customer, if the buyer for that unit has disappeared, then our unit days supply for that particular piece of inventory has now just become infinite. So think about the trucks that you've got on your lot. Think about the truck that you're planning on buying. Think about the people more specifically who you're going to sell that to. If you anticipate there's going to be some challenges in that industry or some challenges for that customer base, shift around your stocking preference and make sure that you're keeping the units on the lot that customers are still going to exist and the customers you're still going to need them for. John, I don't want to rob you of an opportunity to talk about the asset management process, so I'm going to kick that one back to you.
Yeah, look, that's a critical part of how we talk about this business. And so we've painted a picture here that supply is going to start to constrict a little bit and demand is going to be a little bit greater, but don't confuse that with taking your eye off the asset management policies and procedures that you've got in place. If you've got a unit that's overaged right now and hasn't moved, you still need to be thinking about liquidation strategies. And, don't confuse the message that we're sending here today that you can get complacent and just hold on to your inventory. Things are going to get better, but I don't know that that's officially categorized as the cavalry came to town and bailed you out of your problems. So keep an eye on the fundamentals of this business and aggressively manage your assets. And then, Ben, the last bullet point on this slide, this is, we've been impressed in the conversations that we've had with a lot of our clients on how people are reacting to this particular set of circumstances. And, many are using this as an opportunity to go back and rethink some fundamental business processes. I don't know of anybody whose reconditioning or retail ready process couldn't stand some room for improvement. And so, our challenge to you guys is don't let a perfectly good crisis go to waste. Use this as an opportunity to improve your business. We're going to see some changes in the business and in your business over the next 3 to 4 months. And our sense is, they'll never change back. So be aggressive in terms of trying to think about, how to take time out of the reconditioning process, how to be more efficient in the reconditioning process. That's the one that's going to benefit your dealership and your customers the most. And that's where, if we were in your shoes, the advice we'd give you, look at your retail ready process and use this as an opportunity to improve your business.
Heidi, we are actually, for once, right on schedule with one of these things. So we have got 15 minutes built in here for some Q&A. So if you've got some questions for Heidi, make sure you put them in the chat now.
You still there?
I am. Are you?
Yep, we're good.
Good. So Heidi, have we gotten any questions in the chat here, or this is an invitation for questions in the chat as well?
That's what it is, Bennett. It's an invitation. We don't, as yet, we don't have any requests.
So, again, just to reiterate our overarching message here is that the game has changed in the used truck business. We were advising a lot of caution, and we're never going to not advise caution because we're by nature pretty cautious guys. But if you are planning on used trucks being an area that your dealership really took a beating here throughout the course of 2020, and was an area where it was kind of a necessary evil, we think that used trucks should be an area where you are going to have a positive bottom line contribution this year. And for the most part, we think there are some areas of the business that are going to be pretty challenged by this. So our message is that the game has changed over the course of the last 2 weeks in used trucks. And it is an area where we think that you should be putting a lot of focus as a business owner, or if you're a used truck manager, we think that you should be leveraging this as an opportunity to demand some attention from resources from the business. This is an area where you should be able to generate some bottom line contribution this year. And we would really strongly encourage that you leverage this opportunity to make some money.
Hey, Bennett?
Yes, sir.
Let's advance to slide 21. And that way, if anybody would like a copy of this presentation, they'll have my email, and we'd be happy to share that with them. Hey, Bennett?
Yep.
We just got a question. The question is, where is the market inventory level when day cabs will begin to see price pressure relief?
Let me resume my slideshow here. Sorry about that, everybody. So, and we say historically in here, and we say historically with a grain of salt, because this is a relatively new measure for us. But when we look at what happened with day cab pricing over the course of the last few years, where the pressure started to build and where we started to see a change in the day cab values was right around the 4750 number, probably called 5,000. So to give you a little bit of background on this, John and I created this inventory index to mimic what your customers see when they go through the process of buying a piece of inventory. So if I'm looking for day cabs, where am I most likely to look to see what day cabs are out there? And based on what I see listed for sale, how likely am I to be able to either pay full price for your unit, or B, come in and beat you up and say, well, I can buy the same unit someplace else. So our anticipation and what our historical suggestion is, when this index hits about 5,000, is when things are really going to slow down and flatten out. And below 4750 is where we are going to start to see upward pressure. So what you can see here is that right now that reads about 9,500. Day cab inventories are probably going to need to cut in half before we see significant upward pressure in day cab pricing. John?
Yeah, the only thing that I might add to that, Bennett, is it's a little bit more of a challenge to predict that point. Directionally, I think you're absolutely correct. The one thing that makes the day cab sector a little different than the sleeper sector in this assessment is the concentration of where those inventories are held. Ryder and Penske really are holding a significant percentage of the day cabs that are available in the marketplace right now. So, if they elect to do something different, that's certainly a wild card that's difficult to predict. But our sense is that somewhere in that 5,000 plus or minus range, we'll start to see some lift in day cab prices. And I think that's what you've kind of indicated here on slide 13.
Right, big subject to, again, like you said, there are a few players that hold a huge portion of the day cab inventory and have been driving that price down over the course of the last few months, few years. If they decide to do something different, it won't really matter what this says. It may give you some opportunity to get some quick wins in there, but if they decide prices are going up, prices are likely to go up.
Hey, Bennett, I've got another question here, and I might take first bite at this apple, and then if I miss something, maybe you can come back and follow me up if that's okay.
You never do, but I'll give it a shot anyways.
The second question is the uptick in used truck demand related to retail, wholesale channel, or both? First off, we're pretty consistent in our methodology, and our belief, which it isn't universally shared in the industry, is it really shouldn't matter which channel you're talking about, because prices in all the channel move in all the various channels move in concert. We've demonstrated that consistently over the last 5 years. So when the auction market catches a cold, when the auction market sneezes, the retail market catches a cold, and that's just a fact. But the numbers, the increase in demand specifically, the only increase that makes any tangible difference to our clients is if there's an increase in retail demand. So, but we'll see it in these other channels too, as people start to move their way through their inventory and perhaps get in spot shortages of selected types of inventory. They'll move to the wholesale sale channel first to try and fill those needs. So pricing, demand and pricing in all channels will move in concert.
And so the only thought I might add there, John, is that the and again, it ties back into our frontline ready conversation, is that the people who are going to, the demand lift is going to come from people who need trucks right now, right? And it's going to come from people who have got loads that need to get moved right now. And they're going to need to be trucks that they've got some confidence from a plug and play standpoint. So where we think the most supply clear out is most likely to change from, and is most likely to be coming from, is going to be from that retail channel. Like John said, this market always builds from the ground up. But when you think about farther in advance of where is the demand factor going to change from the most immediately, it's likely going to be on that retail side of things to fill the immediate needs. So the auction market wouldn't surprise me to see it trail a little bit here because, like you said, the corporate lots are still pretty full here. So I would anticipate to see an uptick in retail activity, followed by an uptick in wholesale activity, which would be dealers picking up inventory from these corporate lots that are still pretty full, followed lastly by auction demand of the more tired dogs, right? But there's still some good units out there, both on dealer lots and corporate lots, which we think are going to be sort of synonymous with wholesale lots within relatively short time. And so if I'm thinking about in terms of which domino is likely to fall first, I think you're going to see an uptick in retail activity, used truck retail activity, followed by an uptick in used truck wholesale activity, and finally from the auction market.
Ben, next question is, can you review any risks to the demand pop discussed earlier? What would make the cavalry not come?
So the short answer to that is who knows. The long answer to that is this is going to be a real test for some of the underpinnings of federal, state, and local governments in terms of the response. So, I think the big demand challenge is if this thing breaks contain all the way and everybody's sick, and who knows what's going to happen next. I think, again, when we talk about the demand pop, I want to be really careful to specify that the demand that we see increasing in the near term is in Class A, and specifically sleepers and day cabs, things that are going to be integral towards moving raw materials and finished goods up and down the supply chain in big amounts. I think the short-term demand help, or the short-term demand that we're going to see for mid-range, heavy haul and vocational stuff is going to be precipitous. And if it's not all the way dried up already, it should be drying up pretty quickly. So, I think, I don't know if I see a huge risk to the demand pop. I think the question is going to be, how quick does it get here? How quick are fleets able to respond? How much faster do fleets burn through the units that they've already got rolling out there on the road right now? How much does that pull that demand forward? Where, like I said, if this may have been a unit that we were looking to swap out in a year, if the hours of service are gone and we're running this thing up and down the road all the time, that's going to burn out faster. So how much quicker does that pull it to us? Which I think is the big question. In my mind, it's not a question of if, it's just a question of when.
And I would agree that the only thing that would keep the demand pop from materializing is an economic correction so severe that it looks more like a depression than a recession.
Right, and a collapsing of the federal government's ability to respond, and I don't see that now. Again, it's all pretty wild these days, right? So I'm never going to say never, but I do not see that as a high likelihood at this point, is how I'll say it.
Okay. Hey, Ben, one last question here, and I'll take a first bite at this one, and then you can follow it up. But the question is, what about wild cards that you discussed in your 2020 forecast? Are there any positive wild cards like an FET repeal or infrastructure programs associated with the $2 trillion increase, hurricane seasons, et cetera? And you know, my sense is our forecast for 2020 had some pretty reasonably aggressive assumptions about infrastructure spending, and I think that'll come to materialize. I don't know that I see that. I don't know that I see that being a positive thing in the used truck market beyond what we've already forecasted. FET, of course, is a new truck issue, so I'm not so concerned about what impact that will have. But if you think about it, if FET goes away, then new trucks relative to used trucks might become a little bit more affordable. That might be a threat, but you know, I kind of think right now most of the wild cards that are on the table kind of relate to the magnitude of the economic correction that we're going to face, and will that be so great that it retards demand? Not sure. You know, and you couple that with the supply correction that we're right in the midst of. I think the focus of 2020 turned decidedly positive here this month.
I would say if we're talking about wild cards, we sure got a handful of jokers right now. So, you know, it's all up in the air right now. The big advice we give you, and we're coming in on only a few minutes left here. So first of all, I want to thank everybody for your time and your participation here. These questions have been excellent. So thank you guys very much for kicking those our way. You know, our message on all this is be vigilant and continue to monitor this stuff as closely as you can. John and I are here. You got John's email that's on the screen right now. This thing whipsawed over the course of about a week and a half. We went from a pretty bleak used truck picture to now a pretty bright used truck picture. I don't necessarily see a whipsaw back, but you know what? Nobody saw this one either. So keep your ears really close to the ground, continue to be vigilant, continue to be cautious, but we would also say peppered in with that caution should be a fair amount of aggression right here. There are going to be opportunities for you as a used truck department over the course of the next 3 months that I don't want you to miss out on because the game changed and you weren't paying attention. So if you've got any additional questions, please reach out to John. His contact information here is on the screen. It's johnw@keyadvisors.com. Should say specifically, make sure that W's in there. Otherwise, Keith's son is going to get a whole bunch of emails and he probably ain't going to be able to help you much. Great guy, just doesn't know a whole lot about used trucks. So be careful with the W, and johnw@keyadvisors.com. Thank you again for everyone for your attendance, your participation. Please reach out, stay vigilant, pay attention. Let's make some money here over the course of the next few months because there's a chance to do so. And Heidi, that's all she wrote from my end. I don't know if we've got a closing message that you want to put in or how we want to wrap this up.
Okay, thanks, Bennett. Thanks everybody for joining, and we will have a recording available shortly after this presentation closes. Thanks everybody. Have a great day and a great weekend.
Thanks everyone.